Hello and welcome to the Performance Monitor. My name is Chris Leyland and today I'm going to spend the next few minutes talking about what is our flagship investment product, and that is the True Potential portfolio range. Okay, so firstly, let's start off by discussing the performance of the portfolios, what changes have been made, and then what I'm going to do is look at what are the key themes that we're seeing from our fund manager partners right now. Okay, so looking at the month of April, portfolios have lost some ground, and that's due in large part to sterling strengthening. So what you see when the pound gains in value, it weighs down on returns generated by investments not denominated in sterling. Thankfully, a number of our managers who invest globally also have the skill set to hedge against foreign currency risk. This has taken the sting out of recent sterling strength, particularly against the US dollar. We would, however, not fixate on 1 month's numbers, would draw your attention to the longer term figures, which are extremely positive for investors, and that's across all risk categories. Our income portfolios show positive numbers over the month and give the clearest demonstration of currency hedging in action. You may recall that our Income Builder Fund, which invests globally and is sub-advised by Goldman Sachs, is now fully hedged against sterling strengthening. This allows the style benefits from bottom-up stock picking and the sources of return from traditional but also non-traditional asset exposures to fully emerge. In April, returns for both of our income portfolios were positive, helped immensely by Income Builder and our monthly income fund sub-advised by Columbia Threadneedle. And that's 80% invested in UK equities and 20% invested in sterling denominated bonds. Although UK stocks fell in aggregate over the month, the team at Threadneedle demonstrated excellent stock picking, as also did the team at Close Brothers. It's worth remembering that Close Brothers fully hedge out non-sterling bond exposure, and they also half hedge their equity exposures. Okay, so moving on, as you'll know, we speak to our fund manager partners at least monthly, looking for any short-term key themes. And what we then do is we then tilt our portfolios to take advantage of these key themes. This month, we've seen more disparity in view between our fund managers, with our more politically focused top-down managers more nervous with heightening geopolitical tension and Donald Trump struggling to enact his spending and taxation policies. And that's been weighing quite negatively on markets. However, to counter this view, our more bottom-up stock-picking managers are less concerned on valuation, believing the medium to long-term outlook for economies and therefore risk assets is positive. Some of our more cautious managers right now are implementing strategies that act as a buffer against increased market volatility. This can take the form of holding more cash or gold or introducing more alternatives into the mix. The beauty of the portfolios is the breadth of assets they can invest in. And I speak to a lot of people and I keep on hammering this message home. It's not just invested in equities and bonds. Our managers stress their ability to deploy innovative strategies to enhance returns in a form of insurance against bonds and equities falling simultaneously. This also aids diversification. Now let's move on and take a look at what trading has taken place over the month. Rebalances have been placed for the cautious and growth plus portfolios. Within the cautious portfolio, the True Potential 7IM Cautious Fund has been reduced. Prior to the adjustment, the fund had a small overweight position within the portfolio. Reducing exposure aligns the positioning with the rest of the portfolios. This decision was directly aligned with risk optimization, whereby we want to manage risk and not just reduce it. In order to generate returns, risk is part of the overall equation. 7IM are currently anchored on political concerns, which of course exist, and they've been dialing down risk. The switch to the True Potential Close Brothers Cautious Fund and the True Potential Allianz Cautious Fund helps us to control for both risk and return optimization. Close Brothers are stock pickers and have greater ability to navigate valuation risk, and Allianz are particularly adept at managing volatility, using momentum as a signal to add and reduce risk as appropriate to the circumstances. Within the Growth Plus portfolio, the True Potential 7IM Aggressive Fund has been reduced and the proceeds of the sale placed into the True Potential Allianz Balance Fund. Last month, the True Potential Allianz Balanced Fund was introduced to the Growth Plus portfolio, and that's been introduced to provide increased fund manager style diversification. By adding incrementally to this position, we're spreading the risk and further diversifying the portfolio. Looking at the rest of the True Potential portfolio range, allocations have been kept the same, with the optimization of all four factors continuing to be paramount within the portfolios. Here at True Potential, I personally meet with many advisors and end clients, and I'm constantly asked, how are the True Potential portfolios different from other discretionary fund managers? For me, the key benefit of using the portfolios is advanced diversification, not just using one single fund manager when formulating an asset allocation. In the same way that you don't invest in one single country or just use one type of investment instrument, don't just use one fund manager. Use a group of what we believe are some of the best managers in the world, all with differing investment styles, which helps us to flexibly manage risk and seek to improve the outcome for you. Okay, thank you very much, and I'll speak to you next time.